don't forget, and I certainly didn't, what happened last December 24th when the Dow plunged more than 650 points and the S&P saw losses of 65 points, both coming close to bear territory. This was literally a year ago, and yet even with that crazy movement, the S&P 500 rose 2.9% during the Christmas week last year, which was its best Christmas week since 1998 when it gained 3.2%. So with new records in sight, can the S&P 500 surpass its 1998 Christmas week performance? Or will the Grinch show up to ruin the Christmas party? To the floor show now. At the New York Stock Exchange, we got Thomas Hayes. At the CME, Phil Flynn in the middle of the screen there, and the CME as well, Chris Robinson. Thank you all, gentlemen, for joining me today. Chris Robinson, let's start with you right now. I want to talk about the low volume that we're seeing on the markets right now. If our viewers are watching, should this be an opportunity to get in, or should they wait until January comes?
I think unless you're a professional investor, you should not be involved in this market till after the first of the year. Historically, this is you can have some very, very choppy trades, and I would wait and enjoy your holiday. There'll be plenty of time to get after it at the first of the year. And anybody that's trading right now, quite honestly, is trading because they have to, either they had a bad quarter or something like that. So 90% of the people that are still trading right now are professionals. And I would say, keep your powder dry. We're going to have a correction, right? You talked about, the point correction with the Dow at, 28,500. A 5% correction is 1,400 points. So is that 1,400 points going to happen in one day? Is it going to happen in a week? I don't know, but we are overdue for that correction. It's going to come. And I think for your viewers at home, that's where you want to be ready. Okay, if we get that dip, then you want to look, because you want to buy on dips. If you're a long-term investor, if you've got a 20-year horizon, you have some stocks you want to buy on a dip, that's the way I'd handle it.
Okay, well, so Chris, you've just said that you have a little bit, I guess, of skepticism, just a little bit hesitant going into 2020. But Tom, I want to ask you this, Thomas. You have less bad global growth around the globe. You're starting to see the de-escalation of trade tensions. A lot of cash on the sidelines that's going to re-enter the market. So could this be an opportunity maybe to get some of the gains in January?
Christina, there will be no Grinch this year. They took him out behind the barn last year and shot him after such a terrible December. Okay. You've got taxable investors. They've got no reason to sell here. They're going to hold over to January. You have active managers as of Friday. We're still underweight. National Association of Active Investment Managers have them at 78.8%. They've got to chase into the year end. You've got earnings estimates of 9.6% earnings growth. You have a healthy rotation. We're now getting some money into energy and commodities. When I was on last month, I talked about energy. We're up 18% in the last 3 weeks rotating into energy, the worst to first in 2020. And now we're going to see corporate guidance. And what no one's looking at is with this China deal better than expected, what could happen is earnings guidance could actually go up in coming weeks as we get into earnings season. So the Grinch is dead. We've got some good days ahead of us. And then we'll see what guidance looks like in January. Will we have some volatility? Will we have some profit taking? That's possibly true. But on balance, we're in good shape.
I really love how the panel right now, I chose to go to the two opposing ends, and then you've got Phil Flynn in the middle. Phil, given what you've just heard from our panelists and going into 2020, you saw the tech sector outperform the S&P 500. The tech was up 47% just this year alone. Communications up 32%. Can this really continue heading into the new year? And like Thomas just said about earnings growth, I don't know. Do you think that this can continue this ride?
I think it can. I'm still upset about the Grinch. I mean, oh my goodness. That's
such
horrible.
A visual, right?
I feel so sad. I know. I'm poor guy. Yes, it can. And I thought it was very interesting, Christina. You brought up that big news about Apache. We were talking about Apache last week, the energy firm, and everybody said it was terrible. It was the worst performing stock of the entire decade for the last 10 years. And all of a sudden, wait a second, we got good news on the worst performing stock of the decade. Total, the French oil company's coming in, they're working on some of these big plays. So that to me is a sign that when you're seeing the weakest sector starting to turn around, that means that this market is for real. And I think going into next year, I think energy could be the one that can really carry us into the new year. But I like tech. I like everything else. I like everything else your other guest said except about the Grinch. Other than that, he was good.
Phil, and I really like how you pronounced everything better than I did when I first opened this show, so thank you for doing that.
Repeat it to me 10 times a day, that's why I know.
And just to everybody's point, I did read a Vanguard note today saying that there's a 50% odds of a correction in 2020, but that also means 50% of it not happening. I love this panel because it was well balanced. Thomas Hayes, Phil Flynn, and Chris Robertson, thank you guys for joining us.
Thanks, Christina.
Disney.